how did a snack company convince people to eat 300 million more snacks in just 3 months?
I mean, it is just a completely staggering number.
Welcome, everyone, and thank you so much for coming to watch the video today. For this episode of Earnings Unpacked, we are taking a deep dive into PepsiCo's Q1 2026 presentation.
Yeah, and honestly, their execution here was just incredibly solid. I mean, organic revenue was up 2.6%.
Right, and core EPS jumped 9%, with operating margins expanding by like 10 basis points.
Exactly. And they reaffirmed their 2 to 4% organic growth guidance. But the overarching strategy here is what's really fascinating, driving growth funded by aggressive AI-driven productivity.
It is basically like a race car driver flooring the gas for growth while, somehow upgrading the engine mid-race.
That is the perfect analogy. So let's just move systematically through the Q&A session to see exactly how they handled external pressures.
Yeah, starting with Durham Osenian from Morgan Stanley, who asked about the Iran conflict impacting international demand.
And Pepsi's response was that they have no major supply chain issues. Their scale basically provides redundancy, and international business is actually accelerating with zero demand impact from the war.
Wow, that's huge. Then Andrea Teixeira at JP Morgan asked about the sustainability of the Frito-Lay volume inflection.
Right, and Pepsi noted they delivered 2% volume growth, and yeah, those 300 million new occasions using a holistic strategy of value multi-packs and healthier permissible snacks.
Which is a brilliant pivot. Now, before we dive into the beverage numbers and the S&P cut data, if you are finding value in our Earnings Unpacked series, make sure to like and subscribe to the channel right now so you never miss an update.
For sure. So moving to Bonnie Herzog at Goldman Sachs, she asked about Frito-Lay margins and beverage volume pressures.
Total company margins are up, and the beverage side grew 9% in revenue with flat volume once you exclude a third-party water transition.
Right. Then Lauren Lieberman from Barclays asked about Lay's specific turnaround progress post-Super Bowl.
And the response was that the global restage is succeeding. IRI data actually shows value share gain and growing household penetration.
Which perfectly ties into Kevin Grundy at BNP Paribas, asking about back half organic sales expectations.
Yeah, Pepsi reaffirmed that 2 to 4% growth, leaning toward the upper end in the second half of the year.
And Filippo Falorni at Citi brought up the timing of Frito-Lay innovation distribution in Q2.
Right. Pepsi said those innovations are currently at 40 to 50% distribution, and they are accelerating heavily into the summer.
Okay, this next one is really interesting. Michael Lavery from Piper Sandler asked about pricing timing, GLP-1 impacts, and S&P cuts.
Yeah, Pepsi responded that S&P restrictions began in 8 states, but it is just too early to see impacts. And they claimed savory snacks are actually outpacing total food.
I mean, I have to push back on them here. Just brushing off the GLP-1 weight loss drug trend, that feels like a massive blind spot for the company's long-term health.
Oh, I totally agree. You can't just ignore a massive pharmaceutical shift in human appetite. But anyway, Robert Moskow from TD Cowen asked about beverage market shares and value decline.
And Pepsi pointed to strong growth via energy drinks like Celsius, functional hydration with Gatorade, and modern soda like Poppi.
Yeah. Then Peter Grom at UBS asked about Frito-Lay's sequential improvement expectations.
Pepsi is forecasting continuous organic volume, revenue acceleration, and profit growth.
Right. And Steve Powers at Deutsche Bank asked about competitive pricing intensity.
Pepsi expects a highly competitive summer, but they will rely on deep productivity, lowering the cost per unit rather than just slashing prices.
Which Robert Ottenstein at Evercore actually asked for more details on.
Yeah, Pepsi said they are benefiting from past plant closures and headcount cuts and are now rolling out AI routing, digital ordering, and a supply chain integration test in Texas.
It is a massive overhaul. Then Kamal Gajrawala at Jefferies asked who is actually driving those 300 million new occasions?
And it is lapsed, consumers returning for multi-pack value, plus new consumers drawn to zero sugar and no artificial innovations.
Exactly. Finally, Chris Carey from Wells Fargo asked for details on their World Cup activation.
Pepsi is launching a massive No Lays, No Game global campaign, highly personalized marketing, and a global Quaker restage.
So just to wrap this all up at a high level, the main themes from this presentation are very clear. PepsiCo is aggressively defending its snack and beverage dominance.
Right, by trading on value packs, leaning heavily into AI-driven productivity to keep costs down, and gearing up for massive summer marketing pushes like the World Cup.
It really is a masterclass in scale. Thank you all so much for watching.
Yeah, definitely click like, share the video, subscribe, and stay tuned for our upcoming content.
And we will leave you with this final thought. If AI and predictive routing can slash corporate costs enough to fund a massive global snack war, are we entering an era where algorithms ultimately determine what you crave?